Director of Capgemini's Applied Innovation Exchange in San Francisco. We're excited to partner with Lohika on a series of events featuring some of the best engineering leaders. On behalf of Capgemini and Lohika, welcome and thanks for joining today. We've enlisted an exciting panel ready to share experiences and discuss some of the most relevant engineering topics of today. Toward the end of the event, you can all engage directly with the panel in breakout rooms. Before I introduce today's moderator, let me give you some background on Lohika, part of Capgemini and the Applied Innovation Exchange. Lohika partners with growth stage technology companies to help them engineer the next big thing. They collaborate closely with clients' engineering organizations to, when needed, transform them from bottlenecks to growth drivers. Lohika's clients are driven to develop the most disruptive and impressive products and services. Lohika shares this passion. It's what they're built for. The Applied Innovation Exchange is Capgemini's global innovation platform that leverage a framework for action, a network of exchange locations, and a high-performance engagement experience. Together with a broad community of innovators, sector experts, business and technology partners, academics, and startups. So that said, I am super excited to introduce you to today's moderator, Hemaraj. Yash is a partner at BGV, Benhamou Global Ventures. BGV is one of Capgemini's close venture partners in Silicon Valley, and we couldn't hand over the event in more capable hands than yours, Yash. Take it away.
Thank you so much, Andreas. Hello, everyone. Before I introduce our panel of leading fintech leaders today, let me give you a little bit background about myself. I'm a partner here at BGV, Benhamou Global Ventures. We are based out of Palo Alto. We have offices in Israel and France. We invest in early stage enterprise software businesses. Typically, when I say early stage, seed and Series A is our sweet spot. And we invest in companies that have a cross-border nature to them, typically companies that have teams in innovation hubs such as Israel, France, India. And a big part of what we do is we help them make a transition from these innovation hubs to the Valley, set up their teams over here. All of us in our partnership have been operators. So we use that operational experience, roll up our sleeves, and help these companies undergo rapid scaling, which is kind of the theme of today's discussion. Before I joined Venture, I was an engineer myself, built indoor wireless networks, went through this phase of rapid scaling. So I'm excited to share some of those perspectives with all of you today as well. Before we continue, let me introduce our amazing guests today. Our guests are Jeff Winner, who's the CTO at Happy Money. We have Kevin Doerr, Chief Product Officer at Marqeta. And we have Shane O'Flynn, Head of Engineering at TradeIX.
Oh, hello, Jeff Winner here. Happy to meet all of you this morning. I wanted to do a little bit of an introduction of myself. I'm currently the CTO at Happy Money. Happy Money is a startup that does unsecured lending for the purposes of debt consolidation. And for a little bit of history on myself, I came to the Silicon Valley forever ago, a long time ago, like 1985. But I came to FinTech about 10 years ago, where I founded a startup called CardSpring, which was for the purposes of offline attribution for online advertising. We built that company and were purchased by Twitter. At Twitter, I ran the commerce and payments team. I left Twitter to go and be the CTO and head of engineering at Stripe. I worked at Stripe for a couple of years. And then I was recruited to Goldman Sachs, where I got to build the Apple Card, and I was CTO of Marcus Bank. I left there about a year ago to join Happy Money.
Well, amazing set of companies over there. Thanks, Jeff. Kevin, do you want to introduce yourself and talk a bit about you and your company?
Yeah, sure. So I'm Kevin Doerr. I'm the Chief Product Officer for Marqeta. I lead the product design and engineering teams there. Marqeta is known as a modern issuer processor. It's a short way of saying we provide APIs for developers for sort of super innovative companies to be able to build their own card programs, whether it's prepaid, debit, or credit. And then we provide all the surrounding support for processing those transactions, providing data, settlement, reconciliation, as well as providing risk and fraud around those programs. And we work with some very innovative partners like DoorDash, and have interesting use case scenarios for Cash App, as well as some larger financial institutions. Increasingly more and more innovative companies using APIs and abstraction layers to build their own solutions. I've spent the last 25 years been fortunate enough to work with large public tech companies like Microsoft, smaller private equity companies, Weather Company, a little bit of Yahoo in there, some startups. Most recently was running the domains in the DNS business for GoDaddy. Pretty large scale infrastructure. I think the common theme, not unlike Marqeta today, is sort of high scale, high availability distributed systems. And I've been fortunate enough to work on some great teams over time.
Amazing. I mean, today with the whole entire fintech industry being catalyzed by APIs, cloud, etc., the entire industry, you see all of those market maps of unbundling the bank, unbundling of probably personal finance, everything. It's amazing to see so much of innovation, and you guys have been in the middle of it, driving all of this. So I'm looking forward to a great conversation today, Kevin. Shane, would you like to introduce yourself and TradeIX?
Sure, yeah, absolutely. So I'm Shane O'Flynn. I'm the head of engineering for TradeIX, and we are the builders of the Marco Polo Trade Finance Network, which is a permissioned distributed ledger blockchain-based trade finance network. So we're in the business of removing quite literally the tons and tons of paperwork from the trade finance business. And in so doing, allowing the funders to profitably address the long tail in trade finance. So about half of the trade finance globally is not addressed by the banks and by funders, the alternate funders, because it's just too expensive to do so. So we're setting out to make that a viable market for them. More importantly, the upside on the other side is it opens up the cash flow to small to medium businesses globally. So a lot of small to medium businesses squeezed, like in COVID last year, their cash flow needs can now be met through a venture like ours. So hopefully changing the world in a very positive way.
Amazing.
Yeah, thank you. Personally, I'm a 30-year engineering vet. I started out post-college in the second wave of AI, which was expert system, rules-based expert systems, which imploded, but it was great fun while we started. And that led me into telco. So Yash, like you, I'm a telco head at the back end. And I spent 20 years building high volume transaction processing systems, 15 of those with a startup called OpenNet, which was acquired last year by Amdocs.
Very nice.
Yeah, so that was cool. It was lovely to see it happen. But if you make a mobile call or a data call in the US, it goes through that OpenNet software somehow along the chain. So we did some real great success with that, which was fabulous. And I moved into fintech and blockchain about 5 years ago, and looked for a change of scene and thought there was a natural jump from telco networks regulation and high-speed transaction processing into fintech. So that's where I moved, and I've been here ever since.
Amazing. And it's I mean, everybody hates paperwork. So and I've seen personally, when I see some of the companies that I see on a daily basis, just the amount of paperwork that is there in the ecosystem. And the second part of it, which you covered briefly, was just eliminating the delays that this paperwork causes, frees up so much cash to kind of put in use to so many different ways. It's just amazing to see what it has done to the entire fintech industry. So I'm so excited to discuss a lot of these topics with you today. So before we get started, maybe I would like to kind of talk and get your perspective about rapid scaling. When I say rapid scaling, what does that mean to each one of you? Maybe Jeff, you can get started.
Yeah, I can talk about that. I sort of had two recent experiences with very rapid scaling. One of which was at Stripe, of course, and that wasn't a complete rocket ship, but it was at the place where we scaled from, hundreds of thousands of merchants to millions of merchants, and to, as a result of that, to, many hundreds of millions of transactions per day. And so to me, in fintech, that is the sort of scale that I'm thinking is hundreds of millions to billions of API calls per day, not the scale of a Facebook or a Google or a Twitter where, every API call is monetized. So, you don't need the same number, but by the same token, you can't forget anything and everything has to be done accurately. And then of course at Goldman, we had the classic thing not to do. Unfortunately, it went very well, which is to build your product and launch it with a massive partner at massive scale the first day. And so with that, essentially, I can't give explicit numbers, although Apple's broadly said it was the most successful credit card launch ever. We went from 0 to millions in 2 or 3 days. And that was an exercise to me that taught me the value of the actual SRE methodology, which is engineering for scale and for availability, so that you deserve it and you don't just get it by being lucky. And we spent a ton of time doing that analysis. Apple was actually a fantastic partner to work with on that. And so sort of those two things to me, it means the planning for sustained growth over time and building the systems and engineering that accommodate that. And then also, when for a business reason you have to do the unwise thing of a big bang launch, expending the real SRE effort to make sure that you deserve the availability that you need.
Got it. Kevin?
Yeah, I think Jeff characterized the nature of the fintech transactions really well compared to others, right? If you're in the consumer space and every API call, every transaction, every get is coming with an ad call, coming with a bunch of other stuff, but it's generally pretty lightweight. And if you screw it up, it's generally okay. You'll get back on it. With in the financial services world, you've got to remember everything. There's got to be a much higher level of precision, and everything's quite a bit chattier and bigger. And so I think when you talk about scale and the hundreds of millions of transactions volume, you're still talking about a higher degree of difficulty in terms of getting that right. And so I think that's right in terms of the transaction scaling part of it. And I think further to the SRE, and I think we'll probably have some common definition between the three of us what that means. But for me, I think the scaling thing is as much about the systems themselves as well as the seams between the systems. I think paying a lot of attention to network routing, connection pooling, things that sort of sit in between and ensure that you've got the connection volume that you need. You've got enough storage. You're kind of making sure that you're uniformly ready for scale, to Jeff's point again, which is you don't get it for free. You have to be planful and thoughtful about it. The other part I would add is that as much as the platform scale and the ecosystem scale is important, I think the other two aspects of scale, I tend to think a lot about are the process scale. How are you thinking about growing your process and improving your process, the maturation of the whole approach to software development? That has to be concurrent as you're kind of going up that curve, and whether you're adding customers or pure transaction scale or geographic expansion at the same time. And then right behind that is, are you tuning the team growth and the organizational dynamics to change with that scale? What happens with 100 customers is very different than what happens with 500 customers or 1,000 customers. And so each of these pieces, for me, need to move in tandem and to be able to sort of advance and grow.
Got it. And Shane?
Cool. Well, and I think the guys have pretty much knocked everything technically side on the head there. The one thing I always note, and Yash, you may get this as a telco into fintech guys, is the sheer volume of events in telco are so much larger that you look at fintech and you go, this ain't so bad. So we had customers in OpenNet that were doing 30 billion real-time events a day, and we were handling them and the systems back then, 64-way CPU boxes and all sorts of stuff. But the real important thing for us in that scaling at the time was cloud, and sort of moving into fintech, and where I'm absolutely cloud first. It was that elasticity of scaling to allow you go literally from, the hockey stick growth. You've got 500 customers, it catches fire, and all of a sudden you've 50,000 customers in 2 days, or, even as Jeff says, going to a couple of million. And so that scaling, absolutely really important. But for me, I really approach this and the question when you'd asked it from the perspective of the people and the engineers. Mm-hmm. And rapid scaling for me is where I'm looking at effectively exponential growth inside of engineering. So doubling the engineering headcount every 90 days over the course of a sustained period of time. So maybe 9 months, 18 months. So, and that's for me the biggest challenge. There's pretty much no technical challenge a bunch of good engineers can do. You know, she'll sit down or he'll sit down and they'll knock through the problem, no problem. But scaling the teams, getting the teams working, getting them working efficiently, and when you've gone from 3 teams to 12 teams, making sure that they're not stepping on each other's toes and banging into each other in the hallway is a really, really important part of the whole business and the challenge for me. So I spend very little time in the code now, which some people think is a good idea, but it's all about how do I go from, we'll be looking at maybe doubling the engineering team again this year for the second time in a row. And that to me is rapid scaling. That to me is the challenge. And it's why I do this. It's why I get up in the morning.
I mean, it's such an amazing feeling and the experience, you know, when you have like real product market fit and when you see that translate with respect to your customers and the feeling that team goes through, right? I mean, on the human element side, you know, you have happiness that your mission is working, you know, people are resonating with that, with that mission of the company and the problem that you're solving. The greed of the engineering team in the sense that, you know, you want to stretch your product, you want to see what you can do with that product, you want to test the boundaries. And finally the fear, you know, which is, you know, if something goes wrong, then you're letting down so many of your customers, so you don't want to let that happen. And especially in the fintech side, you know, you have your data, you got to keep your data consistent, you got to, you know, deliver at a very low latency time of interaction. So I think this combination of happiness, greed, fear, it's amazing to see. And as you scale the team, as an engineering leader, you got to keep everything, you know, in sync, right? You know, all of these are needed, but, you know, you got to grow the team alongside these behaviors. So it's such an amazing feeling being through that. So my next question probably is to you, Jeff. You know, when you look at as all of you were introducing, you know, there was a little bit of a transition from field outside of fintech into fintech. So when you're hiring talent, do you look for fintech industry's experience? If so, why? If so, why not? Maybe talk about a couple of scaling challenges you had, and a couple of hires that you did, and how that it influenced the way you built your teams.
Yeah. So for me, the need for talent is so great. I would never constrain myself to a specific industry expertise. I do look for people that have the background that indicates that they have the type of care, complexity, regulatory experience that might lend itself to them learning about fintech and operating in that environment. And then on top of that, I just look for the best people that I can find. Full stack engineers. I almost never will move on the quality of the engineering background itself. Like, I want top star engineers because I never know where I'm going to go. They might have to learn something new. They might have to tackle something new. And I look for people that carry with them an owner's mindset and a desire for impact, because that will naturally pull them to learn about what you're working on. And both at Stripe and at Goldman Sachs, we ran classes for the engineers that were purely about how the financial systems worked, what the regulatory environment. This isn't the like stupid compliance classes. These are classes where they actually understood it, could talk about it, understood where the edges are, and could have good ideas about how to push. And I would feel safe with them making code changes and then not crossing those bright red line boundaries. And so, as with like everyone has said, the talent war is real. I thought this being fully distributed thing would like give us a break, but doesn't seem to have. It seems like everyone's just recruiting even faster from everywhere now, which is fantastic for engineers. And so the one thing that I maintain that is a restriction is a very strict quality bar. Other than that, I figure someone's super smart, has a great background, great attitude, I can teach them what they need to know.
Absolutely. And Kevin and Shane, anything to add?
No, sorry, Kev, just I think you hit it on the head there. It's I always say it's easier to teach an engineer finance than it is to teach a financial person engineering. And on the back of that, it is, you just find great guys, great girls out there, and they'll pick it up, and they'll pick it up fast. And likewise, we change tech so quickly that most engineers are natural learners. It's in our DNA. I guess it's the most exciting thing and the scariest thing about being an engineer is you're 30 years into it and you're still learning from scratch pretty much every year.
Yeah, I agree on the engineering side, both on the fungibility, like just hiring super high quality talent that can move laterally, which I think is important as you grow, especially as you grow. And you can teach engineers, right? They can learn ISO messaging and how that works and what it means and things like that. I do think on the product side, I tend to lean a little bit more on domain expertise in that area because the ramp I can shortcut the ramp a bit for an effective product manager to get in and start driving product strategy and specs and things like that. And I need someone who's got a couple of years. And on the other hand, and I'll say this, I don't think it's too controversial, is there's no added advantage to somebody who's been in the business for many, many, many years. You want sort of the innovation. You want to be able to break things, be disruptive, and it doesn't necessarily come all the time with folks who kind of over-index on experience there.
Absolutely, and several times you see innovation comes from outside, and they're bringing a fresh perspective. Probably some challenges that they had solved in different industries, etc. So you need that kind of spark of innovation. Kevin, we'll stay with you for the next question here. So when you're scaling quickly, how do you think about engineering services partners? When is the right time to consider them? How do you go about selecting the right partner?
Yeah, good question. I think of engineering services partners really as another limb to augment the capacity and capability. And whether you're using that to offset, hiring timing, Jeff points out, nothing has gotten less competitive through the pandemic, which is great for engineering and the culture. But you can offset timing issues with hiring. You can offset certain skill sets that maybe you don't want to acquire them permanently, but you're able to bring them in from the outside to augment and work on projects that you have. I think a couple things need to be true. One, the project needs to be far enough along to be a project. Right? There has to be a clear understanding of what's expected, what the outcomes are, deliverables, metrics at that point. I think those things need to be well and certainly defined by the internal team. I think the other thing is true is there's a state of readiness that you want to be at, whether it's the size of the team or specific skill sets or experience that you have. Hopefully you've been able to acquire people who have experience in working with third parties outside, because it's a different deal. And there's a bunch of different expectations and skill sets and practices that need to be applied to produce successful outcomes with people who are not part of your full-time complement. I think in financial services, one of the other considerations is should they be working on that particular thing? There are parts of our infrastructure or ecosystem that are more challenging, present different conditions, and may not be things that are ready for third-party action. I think those things can be fewer and fewer if you're getting things like permissioning and ACLing and access and things like that right, and also to the extent that you vetted the partner the way that you should. I think the last thing I'd say is the considerations I put too when I think about which partner to work with. One, are you like-minded? Do you share principles over software development lifecycle, what it's supposed to look like, the quality, the testing patterns, things like that? Making sure that you're aligned on those principles, making sure you're working with an organization that has the right skill set, digging in with a partner to understand what specific experiences do the engineers have that are relevant to the work at hand, and making sure that there's some measure of that in place. Certainly making sure that they're a great outfit and they're financially sound, and they have other clients that they've worked with, like you, that can provide some supportive references and things like that. But I think those are some of the key considerations that I look at. And then you're always looking at the leadership. Who's the engineering manager on the other side going to be? What does that look like? Does that feel right to me? And are we more likely to have a successful outcome with a given project?
Absolutely, you got to feel like it's kind of an extended family or an extension of your team, with a tight sense of ownership and culture. So, one other topic I wanted to touch upon today, Shane, and probably I'd love to get your thoughts on this, is outsourcing has come a long way. You can go online and hire people on demand. There are several platforms that have come that make it easy, especially the back-end compliance parts of it, which is around hiring extended teams. Companies like TopTal, Catalent, Upwork, Graphite, they have all come up, and they provide you access to these extended teams, on-demand project teams. Have you had any experience working with those teams, and how do you work with the sense of ownership, culture, and even compensation in such environments?
Sure. So yeah, I mean, I would always approach the building of any contracted or outsourced team with a view of, is this a project or is this my product? And the reason that's really important is, if you're doing something that requires, very low skill, very repeatable, almost automatable, that's perfect for outskilling to, almost, I don't want to say the lowest bidder, but in a way where it doesn't really matter, the outcome's pretty much guaranteed. So, and likewise, if it's a project, it's a one-off, it might require some really, really high-tech engineering, but you'll only need it once. I think those mechanisms can be really useful. But when it comes to product build and a long planned project, I really would fall back on the classic outsourced partner and look at that. And you're looking again at everything that Kevin talked about there in terms of sort of the culture fit, the quality, the engineering, the links of that to what you're doing, sort of how they can do that. And it really comes down to that. If you're building a product, you've probably got 3 years of development in mind. You want to build that tribal knowledge and hold that tribal knowledge and keep it going through. And doing that lends itself more naturally to a longer term arrangement on both sides. So, you're approaching both the actual individual engineer or the small team of engineers with a view of this, we want to do this long term. So I'm not body shopping, I'm not jobbing this, this isn't a gig, this is an actual journey, and I want you to come on with me. So for me, that's kind of how I would look at it. I think it's, our lives and our businesses are being structured like this. So I think it is going to find its place and find its space. I very often look at things like the film industry where, the people who make a film come together, they're all individual traders, individual employees, but they come together for that project, get very intensely involved for the 6 months or however long it takes to shoot the movie, and separate again. And you go, oh, they're all just individuals. But if you ever get to know them, you realize they work with the same teams again and again and again. The director uses the same ADs, the AD uses the same cameramen. So you really are building up teams, and you're building that tribal knowledge of how you work together and how you are together. And I think that's the thing that I think is lost at the moment in the talent on demand kind of market. So it's, for me, it's really I'll suck it and see. I've used it for, like I said, really niche skills where it is a 2-week job. I need somebody to come in, blow a hole in that. But once done, I know I'm not going to have to touch that for the next year or two. So we'll be okay. But the product it requires, and I'm here with Lohika today for that reason. And I've got the same. I was talking this morning to the actual Lohika engineering manager. 25% of the team that started with me in November 2018 are still in the team, and 60% of the people who were there in mid 2019 are still working with us now. So that longevity, that buy-in to my vision and buy-in to our product, and they are Lohika employees, but in fact they are TradeIX engineers, would be how I would kind of describe it. And the value to me of that is just too big to pass up on anything in terms of quicker cash or shorter term commitments.
Kevin and Jeff, anything to add?
No, one other thing, I do think that the reason that we need these higher skilled, more reliable types of consulting teams is that the war for talent is so high. I think if I could grow my team with the level of talent and the level of skills that I wanted, I would probably not use any outsourcing. However, that is not a possibility. And so I look for as Shane said, specific projects. I actually like projects that are off the main core that also lend themselves to something where someone like Lohika might bring a specific expertise that I don't have. And whereas I wouldn't hire engineers based explicitly on a specific expertise, it seems perfectly reasonable to work with a partner who brings that expertise and educates my core team as well. And so that's also one thing I look at. Do they have infrastructure as code expertise? Do they have specific expertise with AWS? Do they have things that I need in those areas that they can bring in and do work and also educate my team?
Yeah, I agree with all that. I think Shane makes some really interesting points. I'm not a futurist, but certainly the experience of the past year plus through the pandemic and the remote work that's created, it starts to give you some directional guidance towards what the future of work might look like. And I think it's the two parts. One, the geographic sort of diversion, some of which will sort of slap back, right? We'll see some of that come back to where we were, but we're also going to see a new normal where hybridized experiences are more likely to be not just acceptable, but encouraged and then required by employers to say, I need to offer a good work product, a good work experience. And then I think secondly, the notion of separation from large corporate entities and the ability to work in these environments. Companies like the ones we're talking about create opportunity for individuals who either may not want to be part of a larger organization on a persistent basis and may want to pursue a different path in life or a different work-life balance or whatnot. And I think the future of work kind of accelerates the ability for those companies to provide value and allow individuals to provide value and contribute on their own pace, on their own time in ways that work for them. We've always had the notion of contractors in this business, and it's sometimes been a difficult one, where contractors stay on board with a large entity for too long a period of time, and all sorts of implications come from that. This is, I think, a better, more organized way of talent making their way into the workforce on their terms, and then being contracted with and paid on their terms over time. So I think there's something has changed, certainly, and some of it's not going back. And I think it leads us down this path a bit more.
Yeah, and definitely, I mean, one of the main things is, how do you manage the short-term focused projects versus long-term? How do you bring a sense of ownership and culture into all of this fascinating challenges as you think about the leadership aspects, the culture aspects of this team building? I want to talk about a book that I recently read called The Alliance. It was written by Reid Hoffman. And one of the observations in the book, they talk about is, especially the talent wars are real. Engineers don't stay in the same job. I'm talking, not just in the same company, but in the same type of job that they do for more than 3 to 4 years. They want continuity. And as engineering managers who work with them, it's this framework of an alliance that you create. It's about the building mutual trust and mutual beneficial framework that creates this buy-in and commitment, on both sides. On the side of the manager and the company, that we are going to invest in you, and here is a tour of duty that you're going to take across your journey through our company, and here is how you would benefit. And from the employee and the engineer side, it's that promise that they make that they're going to absorb the training, the growth, and commit to helping the company in its mission. So it's that beautiful framework that they put, and this concept of tours of duty that I've found very fascinating in order to retain these talent for a longer period of time and kind of keep them motivated. So that was very fascinating, and this is an area that I'm very excited about as an investor, and especially how this future of work is going to shape up post-COVID. Now, gentlemen, I would like to ask you guys to put on your visionary hat. Could you talk about some technology trends, developments, disruptions that are happening now and in the near future? Where do you see some? What are some of the trends that you see in your industry?
I mean, I could go. One of the trends that I'm starting to see is around things like machine learning, advanced machine learning, use of AI, training of models, is those things were done in almost an ad hoc or artisanal fashion for the last few years. And I'm starting to see companies and AWS, like the company, start to come at that with what I think of as really industrialized models industrialized methods of how to use those, which means that you can incorporate that into a reasonable SDLC or CI/CD pipeline in a way where you get the promise of the continuous improvement and the continuous retraining, and also both regulatory safety and operational safety when you use them. And I think that when we figure out how to sort of fully incorporate that into the way we build and ship our products, I mean, especially API products and things like that, that we will see, one, a rapid acceleration in the quality of those, rapid combat of fraud, because the machine's faster than anyone is. And I think it will also then leak over into the general way that we build our distributed system architectures, and will probably ultimately affect the way that we build software, and that we will build that in a more industrial fashion as well. So that's sort of a trend that I've seen, a very encouraging trend for me that I've seen come along in the last maybe 4 or 5 years, and it's really starting to mature.
Thanks.
Yeah,
I think that's a great example. I think it's filtering in everywhere as more and more tools like TensorFlow advance to the next version of it, make it easier to use. I think from my perspective, I think directly in the financial area, I think the introduction of stable coins to our environment and what that means, and you knew this was coming, this is an obvious one, what that's going to bring, not just from a USDC point of view, but there are other, many other stable countries that can provide a fiat representation, a digital representation of their fiat currency. I think that's going to change dramatically, and it's going to ripple through a number of areas in terms of what new rails are developed and what other rails become abandoned over time, how the settlement process actually works, what Forex and cross-border is going to look like. I think those are going to be, that's a significant pattern that I think we're going to see unfold even over the next, basically 3 to 5 years, and have a pretty big ripple effect through a lot of our infrastructure, our systems, and how that works. And then that'll go to products and APIs once we figure out, how we're going to implement and blend those in.
Thanks, Kevin. Shane?
Well, Kevin stole my answer, so I'm going to have to make something else up. But it's so true. I mean, funny, even just starting at the start of this, the use of ML in fraud, and we've been playing with this for a while, because one of the biggest problems in trade finance is the fraud. I mean, if you look at Greensill Capital last week, so those things are coming there. But I would have said straight up, when I look at the next 10 years, I tend to look at the last 5 years and go, see who's won. And it is stable coins, it is decentralization, it is blockchain. And the way I would say it is, if you look at Goldman, if you look at all the big banks, and finally embracing it now in real terms. So I think they will eat the lunch of all of the smaller players. I think the Revoluts in that kind of way may disappear into the big banks, but the technology is already won. And it was the same Yash in telco, where IP won, and it had won 15, 20 years before SS7 networks were finally retired. But the point was, it was there, it was ubiquitous, all the engineering work went there. And I think stable coins and the payment rails is a hugely interesting area that is popping up again and again and again at the moment. And I think you're spot on, Kevin. I think that really is. And for us, we do right up to payments, but we use other rails. But that's been the conversation we've been having. At what point do we make that step? And for us, the concern would be if we take a step too far, we become regulated. And we want to stay away from that side of the business. But it really is. It really is. I mean, those two things, ML and its application in real terms to things like fraud and fintech, is going to be absolutely huge. And stable coins and fiat currency, that crossover is really it.
Absolutely, and the democratization of AI and the low-code, no-code platforms that are coming out, and just the elements of data. How do you keep this data consistent? How do you keep do distributed processing? And there are so many cycles of innovation that have happened before. And what's fascinating for me is the lessons that you can get from that. Be it the cloud evolution or the networking evolution, and how they go through these innovation cycles. And it's what keeps My job very interesting as a venture investor, and I'm very excited about what AI and blockchain, etc., are going to kind of catalyze the next wave of innovation. We are still at the very early phase of this. So I think it's time for us to also take some questions from the audience. I see some very interesting questions that have come up. So here's a question from Andy. I'd like to know from our experts, how do you include customer priorities and improve customer experience during this rapid scale up time? So and would you, Jeff or Shane, Kevin, one of you pick this up?
I can talk a little bit about it from the point of view of like API companies. One of the things that we constantly do is listen to the customers. It's awesome that the customers have their own engineers, because they can actually tell you things that are bad, and they can tell them in a way that you can understand them. And I think that then what I'd like to do is to maintain a well-ordered backlog, work with the product organization, and similar to the way, I don't know if you've ever asked AWS to change one of their services, they'll tell you either that's a stupid idea, we're never doing it, or we're going to put it on our roadmap and here's how it's going to look when it ships. And I think that wisdom that they provide back to you is something that you need to provide back to your customers as well, to say, hey, I hear your problem, don't really like the way you're going for the solution, here's how we're going to solve it for you, as a way of providing that back. And then at Happy Money, we do have consumers actually hit on our website and try to get loans. And that is pretty just a standard iterative process. When we see people having problems, when we see people making requests to customer service, when we see people failing to convert, we look at all those different funnels, prioritize in the backlog, and try to figure out essentially the benefit work trade-off, how quickly we can get them in there.
I think there's a huge benefit in keeping the engineering team exposed to these customer problems and priorities, because that's where the innovation will come from. And when you're in doubt, ask your developer and they will figure it out. So we'll go to the next question. So this is again for you, Jeff. This is a question from Shankar. Very quickly, how does Happy Money identify whose debt should be paid off first, and as some in need more than others or sooner? So there are a lot of parameters that goes into basically the planning process. Very quickly, whatever you could share about it.
So there's two things there. Like one is, so Happy Money is backed by credit unions. We have like $100 billion in assets behind our lending. So we are not lending constrained. We will occasionally find someone who, our underwriting is not based solely on credit score. It's also based on psychometric characteristics of the person, as a way of like lending to more people who might not get a loan. And then also an overall general financial health and ability to pay. We don't want to make people's situation worse by giving them a loan. And so if we cannot give you a loan, we will typically provide you with what we would call a path to yes. Like, what would we need to see from you in order to like improve our ability to provide you with a loan? And those might be things like, you choose to use the loan to directly pay off your credit cards, which then gives us a strong signal that you're serious about addressing your debt. You've made your payments on time and you've started to burn down the debt yourself, and we can see that a loan with us would improve your financial situation. Or that you've worked with us and gotten some coaching, and we see that you're actually following through on that through your spending behavior and your income, so that we can make you in a better situation. One of the things that is, I think, pretty unique about us is we will not even recommend a loan for you if our loan won't make your situation better. We will instead recommend, hey, here's your payment hierarchy. You should just pay off this credit card first, because maybe we can't beat the interest rate on your credit card. Maybe that credit card is particularly onerous. And so a combination of those things, so we're not capital supply constrained. We are constrained by you as an individual. And what we do is try to get you to a place where you have a better relationship, happier relationship with your money faster.
Putting customer first. Absolutely. So the next question is from Sammy and probably Kevin and Shane. Can you comment on this? We spoke a lot about rapid scaling today, right? So how do you organize the engineering management as you are going through this rapid scaling phase? Do you hire dedicated engineering managers? do you promote some of the engineering talent to managerial roles? How do you train them probably? So could you give best practices that you use as you're going through this, doubling, tripling every year phase?
Sure. Okay, I'll jump first. So yeah, it's one of the biggest mistakes I think every young engineering manager / director will make, is that she or he will go out and hire 27 engineers and not think about the care and feeding of those engineers and the layer above. So I think you've got to very intentionally plan that growth and have some degree of a multiplier that says, if my team size is 7 and I add, 3 teams, I must have an engineering manager, a lead of leads, whatever you want to call them, in place at that point. And, when I get to 4 teams, that's okay. If I go to 5 teams, I got to split and get a second. So have an intentional structure. And I very often, I don't have a military background at all, but I look to how they scale groups, because if you're talking about 300,000 troops, you got to have a really good organizational model to make sure that they can all get from, one place to another sort of rapidly. And so my model is literally that. It's. I think you don't need a team lead until there's 4 people. That team lead can probably work well up to 7 or 8. And after that, there's too much team leading and not enough doing, and you split at that level. So I kind of have this rule of 4, and at each of those times they go up. So if I'm going from 4 teams to 5 teams, there's 2 engineering managers. That's 2 engineering managers up to about 8, at which point it'll turn to 3. But I would say very consciously approach it and think about it from that perspective. And all the other support staff, all the other shared services. So, how many DBAs are you bringing in? How many, if you don't have pure DevOps, how many DevOps engineers are you bringing in to keep the CI/CD pipeline going? And just looking at it right across the board. I do it with my architects. I do it with my technical project managers. There's a little multiplier, and finance like this as well, because they know when I'm adding them that I'm going to come along and say, at this point, I got to add an extra $200,000 to cover, the shared services aspect of keeping 7 engineers busy, focused, and going in the right direction.
Yeah, I think
Thanks,
the only thing I'd add
Shane.
is, I think having a logical view of the teams in terms of how big is the problem you're biting off, how many disparate teams need to be working on different problems, who's going to be long pole versus short pole in the train, things like that. Like having that clear view in your head, and then to a certain extent on paper to be able to understand that. I think that's super important. I think the other thing is, in terms of the team size, I think Shane's got it right. I tend to use the pizza rule. It's like I should be able to feed a dev team with a single pizza, and when it gets beyond that, then I have to think differently about that, and maybe start to break pieces off and functions off, things like that. And then I think what's really important, and at our scale, I think is super relevant, is how are you moving people through their career trajectory over a period of time? Like, how are you contributing to their professional development, their growth, their contribution to a given organization, and then can you move them through the org? And I think you do have to be very, very planful and intentional about that. Otherwise, you'll end up, bringing people up too soon, or waiting too long, and being too late is as bad as being too early in this case. A lot like venture. And so trying to calibrate where you are within a given individual and say, what are the things that need to be true before I can be confident of moving this person into an engineering manager role, and have 100% confidence that they're going to be largely autonomous, they're going to do a great job, we're going to have great engagement with the rest of the team, and good outcomes. So I think being very intentional about that. Logical view, certain breakpoints, and then paying careful attention to the growth and the trajectory of the team that you're stewarding through this process.
That is so great. Thank you, Kevin, for that. It's a great way to finish the panel discussion here today. This is a great framework that you laid out here, gentlemen. This is amazing. I learned a lot from your experiences today at some of the best fintech companies out there. So you guys are definitely in the middle of this, and thanks for making the time today and sharing your insights with our audience today. again, thank you so much. And I would invite Andreas back in here.
Thank you.
Andreas.
Thank you, Yash. Yes, I agree with you. Excellent discussion. Thank you, Yash. Thank you, Jeff, Kevin, and Shane. We're not quite done yet, though. So here's what's next. First, feel free to visit the Lohika booth. It's on the left in the UI there, and enter to win an Amazon shopping spree. So don't miss that. You can also join one of the 2 breakout bites. These are the breakout rooms that I mentioned in the beginning. You can find by visiting the sessions area on the left, as you can see there. We have actually 2 panelists in each room, so pick the one you would like to join and continue the conversation and engage and ask questions and share experiences. Or you can visit the networking area on the left and be randomly paired with another attendee. Exciting. You'll have a short video chat with the option of exchanging a virtual business card. So don't miss out the opportunity to network. So again, on behalf of Capgemini Applied Innovation Exchange and Lohika, thanks for joining us today. Now go pick one of these interactive features. See you soon again. The next amazing rethink. And have a great day and stay safe out there. Goodbye.